Sì.
Okay, we are live. We are live. Let's go straight into it. Okay, thank you for joining us. Let me just make sure I've got the right screen share. Hang on. Okay, we are live. We are live. Hang on. Let's go straight into it. Okay. Right. So let's begin. The key point I want to stress today in this session is, are equity markets in rally mode, or are we potentially seeing a bear market bounce, as you can see over here? Okay, so bear market bounce. So what is a bear market bounce? Well, what we see is that lower lows and lower highs being formed from a technical standpoint on price action, and then all of a sudden, when you see the bullish part of that lower lows and lower highs, right? You're assuming that we're turning around. We've hit the bottom. Now we're putting in potential higher highs and higher lows. But we have just a pullback to a point where there's more selling pressure coming in by institutions. And that is known as a bear market bounce or a dead cat bounce as well. But yeah, that's something that we're going to break down today, is discussing whether the equity markets will continue in a risk-on mood. And something else that I wanted to touch on is the decoupling of Bitcoin with risk-on assets. Okay, well, whether that's a thing or not at this current moment. So let's get into it. Let's get into it. So what I'll do, I'll move this out the way for the time being. Right, so what's going on in the markets at this moment? So stock markets are firmly in rally mode, right? We're following on from a very strong end of week performance last week for the European markets and the US markets. Asian markets also reached a 3-week high as global markets are rebounding and it's gathering pace. Now, the much talked about pause in Fed tightening lays behind most of the moves that we had seen last week. So we had 7 consecutive weeks of downside movement. Now this is the first of the 8th week where we saw that bullish move bullish mode come into place. And it was largely down to the Fed tightening, right? The pause of that Fed tightening taking place from September onwards is probably behind the move that we've seen overall. And that came from the meeting minutes last week, Wednesday. So it's given this fresh impetus to markets. And now over the weekend, we've had further news. We've had a continuation of risk-on news. We now know that Shanghai authorities will lift many of the restrictions on businesses from Wednesday onwards. So it's easing those 2 months of lockdown we'd seen in China and one of its most important cities when it comes to, supply chain and trade. Yeah. So that's led to S&P 500 in a very bullish mood, with the FTSE also making new highs. We've got the DAX bullish, as well as the Nasdaq going on to sort of test these resistance levels that I've highlighted here. Now, before we go into sort of the technical side of things, what I also want to potentially look into is other factors that contributed to last week's rally. Okay, we're just going to focus on that at the moment. Market participants also were eyeing earnings from specific corporations. And what we did have was, even though we had seen Snap release poor earnings and a poor earning call from sort of the key remarks mentioned within the earnings call, but overall, we had upbeat earnings, and that's from consumer cyclical sort of, corporations like Macy's, Dollar Tree, and Dollar General, all helped boost sentiment like in last week's session, right? So we're just seeing the focus being in the retail sector, and the positive earning reports continued the impetus of a risk-on mood. Yeah. So, if I talk about from a broader perspective, what are the sort of worries? Well, we know rising inflation is probably sort of the key worry there, right? In addition to that, gasoline prices, price of petrol, is also a big concern affecting consumer spending habits, all while retailers face increased operating costs. Yeah, but we did have in the UK fiscal stimulus by Rishi Sunak, the Chancellor of Exchequer, providing some of the, the tightening we've seen on the cost of living being released with an injection of $15 billion, well, 15 billion pounds, should I say. Yeah. Now, another factor from last week's session that we should take away as well is the Fed's preferred inflation gauge, which is the core PCE price index, which excludes food and energy prices. It had risen to 4.9% in April from a year ago. But to note, the increase was in line with expectations and reflected a slowing pace from the prior month, from March's report of 5.2%, making it the second month of lower price increases. And that's maybe also reinforcing the view that inflation may have peaked at this point as well. So yeah, that's sort of one of the key takeaways from last week, which is that's the Fed's most important and preferred inflation gauge. So coming on to the week ahead, sort of looking at the week ahead, right? Now, this week clearly is starting on a positive manner. We can see sort of, markets starting on the front foot. S&P 500 is up only 0.08% so far. And the Nasdaq's also up 0.1%. What we're seeing is as the markets now continue this play on the risk-on mood, will that continue for the rest of the week? Right? Is that going to continue to be the focus for the rest of the week? And so we now know that US stock market rally from last week on this optimistic news that we've heard and I've just spoke about. In addition to now China coming out of their restrictions by Wednesday is also going to boost market sentiment. Do note that today in the US is Memorial Day. It's a holiday, it's a national holiday. So the US market is going to be mostly offline today. It's going to be offline today. So they're going to come back into full sort of risk on mood potentially tomorrow. Yeah. But do note, it's still tradable in the futures market. especially these equities that we're discussing at this moment. So the US is going to be offline. That's going to lower the liquidity in the market, and you could see it being a very quiet session, a mundane session, or we could see exaggerated moves occurring because of the unexpected news around a low liquidity environment. Moving on for the rest of the week. So in the rest of the week, I think the focus in the US particularly is going to be around PMIs, but that's global, right? So we're going to have PMI releases for this week. Towards the end of the week, we have US payrolls. Yep. So we have non-farm payrolls being released at the end of the week, usually the first Friday of the month. We have Bank of Canada with their rate decision, as well. So Bank of Canada rate decision. And of course, we're heading into the end of the month, and there's a usual end of month sort of rebalancing of portfolios by asset managers occurring around this time as well. Today, we do have the EU Council meeting looking for an agreement on the Russian oil ban. I'll cover that a little bit later. Towards the end of the week, we do have an OPEC meeting. And just to add to the mix, we have a two-day UK holiday towards the end of this week, Thursday, Friday, for the Queen's Platinum Jubilee. We have a 3-day work week in the UK as well. Yeah. So the main points of focus for us will be the European inflation data and speakers, especially as we go into the quiet period pre-ECB meeting. The debate is now playing out. Is the 50 basis point hike in July one that's going to be is going to continue to take place? Is that going to take place by the ECB? That's sort of an area to focus on as well. And naturally, if the indication is that there is going to be a 50 basis point rate hike by the ECB, that's a very hawkish step, and we could see a bid in the euro. I'll probably cover that a little bit later as well. But more importantly, the Bank of Canada rate decision will also be key, because they are expected to raise by 50 basis points as well. So if there is a further indication of a continuation in that regard, we could see a bid in the Canadian dollar as well. But yeah, there is not going to be a press conference though. Right? So there's not going to be a press conference. So it's going to be about the statement. It's going to be about the actual decision itself, but there is no press conference. So yeah, let's also sort of go through some of the US equity markets over here, right? So US equity markets saw sort of some inflows. We can see clearly there's inflows coming in from a 7-week slide. But I'll be very cautious about the optimism that we're seeing at this current moment as well. Yeah, as I mentioned, dead cat bounce is high on the agenda in most market participants' view, in my opinion, as well. The key point will be here is, will the Fed pause in September, right? And is inflation peaking and has given the market a feel that the worst is over? That's what the market is engaging at this current moment, and that's what's being priced in, right? But any negative scenarios or negative catalysts to that is likely to see more downside pressure in equity markets, especially. Yeah. So it's likely to be driven by the S&P 500, most importantly, also the Nasdaq. The Nasdaq tech stocks are being, on the brunt of things, most certainly, right? And just to show you, to give you sort of an indication to what I mean by that, we'll just bring this up here as well. So this is showing us the high growth assets in the Nasdaq specifically, right? And what we're seeing is, what were their returns in 2020 and returns in 2021 through to 2022, where we are now. Just looking at some of these stocks here, right, which had made substantial gains. I mean, look at NIO, an EV electric vehicle sort of company based in China. Now, the returns in 2020 was over 1,000%, and over 1,000% return in 2020, down 68%. Yeah. Moving through Zoom video communications is exactly what I'm using right now to speak to you guys. Up nearly 400%, now down 75% from those highs, all-time highs. Right? We can have a look at a few more. Pinterest, blocks down as well. Twitter up nearly 250%, down 71%. Looking on to this side over here. Shopify up 185%, down 68%. Wayfair, Roku up 150%, down 71%. PayPal up 117%, down 67%. So a lot of these growth stocks had taken a lot of the hit in the current environment that we're in, which is the tightening path. Okay, the Fed tightening path is going to have an impact on especially sort of the growth corporations more than say value corporations or cash flow based corporations. Yeah, so that gives you sort of an indication to what we're seeing in the markets, and that's why the Nasdaq can almost be seen as a leading indicator to market sentiment because of sort of what I've just mentioned there. So yes, coming back over to sort of sort of address what I'll be looking at. I'll be following the Nasdaq most importantly. So Nasdaq sort of looking at testing the resistance levels. Now it's coming fast back up to sort of test a key level of resistance, which you can see sort of the prior lows being put into place back in March. So yeah, 14th, 15th of March, those were the sort of the lows prior tested, and we had a bull run from that point onwards, which formed our lower high. And from that point, we had another sell-off occurring to sort of break through the prior support, putting in a new support level, and now we're rebounding back up to sort of this key level of resistance at this moment. So the question is there going to be follow through? That's what I'll be looking for. Is there going to be a follow through and go on to sort of test above the 30,000 figure? Yeah. Looking at the S&P 500, not quite at any sort of key level support. It has gone through the prior level support, sort of testing these lows over here. The next sort of level will potentially be around the 4,300 mark, so it's testing this resistance level over here. I might just highlight that in now, so this one over here, right? But again, we can see sort of it does depend on what the Nasdaq does, what the sentiment is around sort of all the sort of key catalysts that come into play this week as well. So yeah, just apply your support resistance levels, really identify sort of key areas where you could see selling pressure coming into place. But the one to watch, in my opinion, is the Nasdaq. Okay, so the Nasdaq's fast approaching that key level of resistance here as well. Yeah, so we could potentially actually sort of discuss now a bit about the oil markets. Okay, we could look at the oil markets. But before we go into the oil markets, something that I want to mention at this moment now, especially with the equity markets, we've seen these inflows coming in. There is optimism, but be very cautious how you go about with this cautious and this optimistic mood that we're seeing at this moment. It will all depend on the Fed, right? If that Fed pause is likely to occur, and if inflation has peaked, that's the sort of two key catalysts that we've seen that's driving this risk on mood. Naturally, you're going to have earning reports, but earning is dying down now. Okay, so most of earnings season is complete. There's a few more corporations you might want to keep an eye on this for the week ahead. But again, the focus is more pivoted towards the macro landscape that we're sort of looking to manage at this moment here. Now, is the worst over? Is the worst over, right? This is something for you to decide. Are we seeing purely a lot of buying on the anticipation of a large month-end rebalancing? Is this the scenario that we're seeing? Buy the rumor, sell the fact? It feels a tad premature to sort of use that the worst is in, right? That's something that sort of to mention there, because we've seen almost a decade plus of easy money, QE being put into place now with doing a lot of QT, quantitative tightening. It's likely to sort of hinder the projections previously seen in the markets. So just be mindful that we can see markets in a continuation of a volatile conditions that we've seen, especially in 2022. Yeah. Okay, coming on to the oil markets. Let's look at the oil markets here. Now, making new highs, right? But I'm going to continue to go on to make new highs. We've seen a test back up to sort of, the 180 handle, which was also a previous resistance point in this region here. So you can see how, if I just take in sort of the key highs there, about there. So you've got resistance here, and again, the third touch in this region over here. Now, is this going to now potentially put in a new low, or we're going to see a bit of profit taken at this point over here. This just makes the market come to a sort of a bargain area, an area more buyers are likely to step in, and we see another bull run and a break through the 118 handle. Let's see what takes place there. But we've seen already, you know, something that's happened over the weekend. Another sort of area to focus is the European Union. They failed to agree on a deal on Sunday on a revised package of sanctions on Moscow, on Moscow's invasion of Ukraine. And this is coming ahead of a leaders summit in Brussels that's taking place today and tomorrow. Yeah. So EU leaders, they will gather this afternoon for the 2-day summit, but their ambassadors will first meet this morning in a final attempt to try and get a deal on a 6th Russian sanction package. Now, this meeting that's taking place, it's an extended meeting because it's meant to be finalized yesterday. It's not happened. It's happening this morning now, continuation of this. And there's a corporation of 27 bloc countries that are convening at this morning to get this last-ditch effort to reach a deal. So what is the struggle that they have at this moment? Why are they not reaching a deal? Even though we're seeing now, we're focused on crude oil, but we're seeing crude oil sort of, test a sort of 118 handle. We're seeing a bullish sort of impetus. We're seeing high highs and high lows being formed in. If you look at sort of price action, right? So we're moving to the upside, and that could also be seen as a follow through from what we've seen from Shanghai and sort of and China coming out of restrictions. The use of oil it's going to increase, obviously. But yeah, I mean, the gains that have taken in oil at this moment, we're close enough to a potential 2-month high now. The last sort of level high was around the 23rd of March. Now, the key point to mention here is that what the EU Council are looking to do is put an embargo on Russian oil. They want to come to a resolution on an embargo on Russian oil. Now, any agreement would include all 27 bloc members, one of the members being Hungary, right? So the 3 bloc countries that are going against an embargo is Hungary, Czech Republic, as well as Slovakia, right? Now, what they need to do is find a middle ground, right? So to continue to receive Russian oil imports for a set period of time until alternative arrangements can be figured out. That's what they're sort of looking to put into place at this moment here. But do know, we're going to find out more this afternoon in regards to what takes place there from this EU Council meeting. Later on in the week, we do also have an OPEC meeting, but the idea of a concession is very unlikely on supply, okay? And, because what the EU members have mentioned, a lot of the G7, we had the G7 meeting last week, a lot of the discussions that come from the G7 meetings that they're going to put a push on OPEC members to increase production levels. But again, they've not confirmed that. So we'll hear more information there, but it's very unlikely that they will put in any further concessions to what they're already doing at this moment now, right? So yes, I see more upside. I do see more upside in WTI oil. Do remember, do your own research, put in your own analysis, and make sure you trade with risk management. Yeah, coming over, let's have a look at some other markets also. So gold, there's not much taking place in gold at this moment here. One of those sort of key factors that is impacting gold is we're seeing a bit of a bullish move because of the dollar weakness. Okay, so that's one of the sort of key parts there. But apart from that, if there's a risk on move, we're going to see sort of outflows from gold into equity markets, right? As optimism arrives back into the markets and we're moving in a rally mode. So we could see potential new downside to the oil market, but it will be dependent on the dollar. So let's have a look at the FX markets. Let me just realize this. Let's bring this into play. Right, looking at FX markets. Well, we can start with the dollar index. Let's just bring up dollar index at this moment. Okay, so dollar, we've seen months of highs being formed in the dollar index, but now we're on a downward trajectory. Okay, so we're moving more to the downside. Now, why is that? So the dollar is down from the high almost around 3%, and those highs that we've seen, right? Now, driving that correction has, well, let's start with this, right? So, from an overall FX perspective, we know we've got a very short week ahead. Okay, so UK sort of Thursday, Friday we're offline. In the US we're offline today. So it starts with risk assets in demand as China has softened those lockdown sort of curbs, and the repricing of Fed, a pause potential from September onwards, has allowed interest to return to FX carry trades anyway. Okay, so the interest of there has been focused on the carry trades in the FX markets. And commodity-based currencies are also outperforming as well. And I could see that the dollar, hand back some more the gains that it's made over the last 4 or 5 months, right? So just be mindful about that. So we're down 3% from the highs, and the key driver for that correction is, of course, the Fed pause that is expected from the tightening cycle that we've first forecasted, that there's going to be a continuation of 25 basis points from after the next 2 meetings, or 50 basis points of rate hikes. But then it's expected that we see 250 basis points rate hikes, and then thereafter there's a pause. And what the Fed are looking to do is look at indicators, and then make the right decision, right? So it was previously anticipated that there would be, by September, October, we could see interest rates around 2.35%, 2.5% in that range there. And that's been brought down lower. So somewhere between 2.1 to about 2.2% range. Okay. So yes, you need to continue to focus on what's expected from the Fed, but also do note something that's going to be very relevant this week is Fed speeches. There are quite a few Fed speakers expected this week as well. So what their views are and how they sort of give their forward guidance is likely to be very volatile for the dollar index itself. Yeah. Okay, coming over to euro dollar. So we'll just look at euro dollar. We'll look at cable as well. So looking at euro dollar, it continues to nudge higher. We're seeing this Fed pause. It's a marginally sort of better risk environment. Is leading to a bit more dollar balls to come into play. But we're also seeing a lot of ECB hawkishness, right? The anticipation of ECB to be more hawkish is also there as well. So right now, the landscape for the euro dollar is more to the upside because of the macros being at play, in force at this moment. But do remember, there's been reports out as well that suggest that the speculative sort of market in euro dollar have been cutting its shorts in the euro as well. So just be mindful that there is more upside expected, but how much of an upside is expected? That's where you sort of look at your sort of key levels, right? So the next key level, is going to be around that sort of 114 handle. But of course, I just see a lot of resistance sort of in this region here around the 108 handle as well. Okay, so as we fast approach this 108 handle, this could be a very strong resistance level. I don't see that euro dollar being anything above 109 or 110 at this point here. So the next sort of key resistance level is going to be around the 108 handle. So just look for sort of a continuation or a breakthrough that level of resistance, but we could see a bit of a pullback coming into play. Now, expectations are that ECB are already, okay, so the ECB will need to come out more hawkish for this to continue and rally way above the 108 handle. Okay, so that's the sort of key mindful level that you need to be aware of, is that we're expecting more hawkishness from the ECB members, especially Christine Lagarde. Already what's expected is 4 to 5 ECB hikes. Okay, so we're expecting another 4 to 5 hikes from the ECB, and that's already been priced in. If we see a change in that tune, right, a great amount of rate hikes expected in regards to basis points, that's definitely going to give the euro some bid there. Yeah. Now coming over to sterling and looking at cable, and the BOE is somewhere between a rock and a hard place at this moment, because they are trying to tighten as much as they can, and we've seen successive rate hikes from them. But whilst that's happening, then you've got UK government and Chancellor of Exchequer, providing a bit of QE, fiscal stimulus, with the rise in the cost of living in the UK, really sort of having a brunt on the consumer sentiment, should we say? So, yeah, it's a very difficult one at this moment, especially if you're considering the macro landscape. So we know that it does leave it mildly biddish, right? But I'll be just very cautious of what we hear from the Bank of England. Okay, so we've almost got like a double edge of the sword now, right? We've got the BOE in this rate tightening cycle that's occurred already, right? And they were one of the first major G7 countries to, raise interest rates. But at the same time, you've got this fiscal stimulus that's being provided to provide support to, the fragile pricing that we've seen from, petrol prices, for example. Yeah, that's having a knock-on impact of the cost of living for individual consumers. So how is that going to take play in the market? And that's where look at key levels. Okay, do apply sort of key levels where we're fast sort of testing this key level of resistance here around the 126.50 handle. Yep, so 126.50 handle. We've just crossed. Above that, or coming up to sort of test that level. Just be mindful of this now. What we're going to see is follow through, and that could be from speeches. That could be again from Bank of England's sort of views in regards to what their views are in this 15 billion pounds fiscal stimulus that we've seen from Rishi Sunak. Yeah. Okay, coming over now. Let's switch it up. Now let's switch it up. Let's maybe look at something that I want to sort of also cover is the crypto space. What I'll do, I'll grab the chart from somewhere else. Okay, now coming up to cryptocurrencies, right? And one of the key parts that I mentioned is the decoupling of Bitcoin. Is that a factor? Is that a sort of a key factor there, right? And that's where the sort of focus is going to be here. Now, cryptocurrencies still remain weak, even though we've seen that there's been a positive correlation with risk on assets and cryptocurrencies, right? High beta to sort of risk assets, the correlation there. But we've seen that decouple, we've seen that diverge in the very intraday, in the very, very short term. Okay, do note it's in the very short term. This is in the most recent sort of days that we've seen this difference here. So it's the first point is take a bigger picture view. Look to take a bigger picture view. Correlations change all the time, right? Correlations can be inverse and then positive, and that happens on a regular basis and across all markets anyway. Yep. So just be mindful of that. Okay, the most worrying part for bulls is that they seem to have lost, at least in the very, very short term, that correlation with risk assets. So what is next in store for the cryptocurrency space, right? But correlations can sort of be reestablished as well. So take a big picture view and just remember correlation changes at all times. So even though we've seen, equities rallying quite significantly and cryptos haven't followed through, well, we're seeing now that we've seen a bit of a push already in the crypto space, right? So if I now overlay the NASDAQ, if we overlay the NASDAQ, and we look at sort of what we're seeing at this moment here, right? Now, just taking a bigger picture view, what I want to do, let me just maybe, okay. This one here, I might just do this. And let me just remove some of the analysis here. So, okay. That's what we're seeing at this moment here, right? So you can see a very strong positive correlation from 15th of March, those sort of, those lows that we've seen in this region here. This intraday's 4-hour time frame. When we've seen a bull run in the NASDAQ, we also saw the same thing with Bitcoin, reaching sort of the highs sort of in this region here. From that point, markets had slid lower, so we're seeing a dive in the market, a downtrend being established there, and that actually continued, especially in the crypto space. We saw a much larger, greater sell-off taking place in the crypto space there, right? So what I might do is just take it from that side there, and that will make sort of price action over here, so you can see this being 0% over here. So we've seen markets sell off close enough to 35%. At worst, it was around 43.5% of the sell-off taking place in the crypto markets from those highs. Whereas the NASDAQ, testing around the 20% range there. So 20% sell-off from that peak, right? I'm not going from those sort of all-time highs at this moment, just looking at the most recent downtrend that we had seen from sort of, those March end of March sort of highs being put in. Recently, last week, we saw a bull run, and that's where the focus is here. So now if I maybe move down to a lower time frame, go down to maybe an hourly time frame, and we're looking at Friday's session or most of last week's session, right? So whilst we've seen sort of, a bull run occurring from the 24th onwards, we see a bull run taking place. I might just want to now put in that low there. Yeah, it's about there. Now, so quite a bullish move, almost a 10% gain in the Nasdaq, whereas we saw Bitcoin mostly move sideways, if not make a new low, and that was the sort of the panic low, shall we say, was put into place. Right, we saw a sharp move lower, sort of almost you can almost say that's like a 3 to 4%, more of a just over 3% sell-off just taking place in that very short sort of 1 hour time frame on the 26th of May. And then, from that point, markets move sideways, and over the weekend, we've seen a bit of a bullish run taking place now. Okay, so correlations can change at times, right? It can be leading or lagging, right? You need to look at the bigger picture view, and they change all the time. So I don't believe there is a decoupling just yet. I don't think that's the case anyway. And the other question is that on the intraday level, we have seen, yes, there has been some correlation with cryptocurrencies as well as high risk assets, equity markets, especially the Nasdaq. But if you take a bigger picture view, and I might just bring up something here that I have. I went back and looked at a report by CoinDesk in regards to correlation, and what they're showing here is the 90-day trading correlations to Bitcoin. Now, do note that if you look at the 90-day trading correlation to Bitcoin, and you look at the zone, what you'd want to see is a strong correlation, and you want to see that strong correlation that goes in a positive direction above 0.2 through to 1. Right? A negative correlation from minus 0.2 through to minus 1. Right? The further it out it is, in regards to whether it's positive or negative, right? Correlation, the more that shows how correlated it is to that particular asset. But as you can see, generally Bitcoin has remained in this band. It stays within this band of minus 0.2 to minus 2 band. Yeah. So it isn't actually correlated on the higher time frame. It is, on its own trajectory, right? It is, it does not. It has its own macro themes at play on the higher time frame, on a sort of 90-day view. But intraday, yes, you're going to see some correlation. So I don't believe that there's a decoupling, or whether there's a correlation high enough on the bigger picture view to sort of be take a substantial view in the way that you trade the crypto space anyway. But yes, intraday, based on the catalyst we see, will have some type of correlation play in the markets, and that's, as a trader, you need to be aware of as well. But just always remember the bigger picture view, it is on its own macro landscape as well. Yeah. Okay, fantastic. That's it from me, guys. That covers sort of a round of what's taking place in the market so far up to this point now. For the upcoming week, if I just come over, let me see if I can bring the economic calendar. That. Just a quick look. Do I have the economic calendar? Look at this week. Okay. So just looking through, let me just bring up my calendar over here as well. I've got one over here. As I mentioned, the US is offline. Okay, the US is offline because of its bank holiday, Memorial Day. So just be mindful of that. Now we do have the EU Council meeting. Okay, so the EU Council meeting is taking place, and that's something that you need to be aware of. It's not been highlighted as of yet for some reason, but anyway, that there is an EU Council meeting that's taking place, especially a resolution on the EU embargo on Russian oil. And with Hungary remaining the main obstacle, are they going to get over that? Right? Are they going to be able to sort of come to some decision there? So just be mindful of that. And then that goes into sort of the 2-day meeting that we're seeing from the EU. Yeah. Just remember that there might be speeches as well. We're seeing FOMC member Waller will be speaking as well, right? And if there's any other speeches taking place as well, there might be some ECB members' speeches as well. Going into Tuesday. Well, before we even decide, and go into these economic data points, what I'd also mention is the month end. Yep, Tuesday, 31st of May. 31st of May is the month end. So month end rebalancing does occur. So just be mindful of that. And the fixes, beware of the fixes that takes place as well. We can see a high amount of volatility around the fixes as well. But yeah, we've got, Japan unemployment rate, we've got Japan industrial production and Japan retail sales year-over-year figure. In China, we've got general sort of PMI data being released. We also have the EU inflation report, okay? So just be mindful of that as well. We've got the EU inflation rate to be expected and EU core inflation, which removes energy and from sort of its reading there. And then, of course, Canadian GDP figures as well. So we've got Canadian GDP figures towards the US session. And then that's when we expect the US to be active again. So high amount of volatility to be expected from the holiday. Yeah. Speeches-wise, just be mindful of any speeches. I believe there are a couple of ECB members that will be speaking on Tuesday as well. Going into Wednesday. So we've got we've got Aussie manufacturing PMI, we've got Japan manufacturing PMI. Just be mindful of all PMI data that's being released throughout the day. As you can see, it's a very heavy day in regards to manufacturing PMI data. But in addition to that, we also have the Canadian rate decision to be expected. Yeah, so we got the Canadian rate decision to be expected. As I mentioned, there is no conference. So the focus is going to be on the rate decision itself, but also the rate statement. Okay, so do look at Forex Factory and the economic calendar. You can click on the tab over here. It will give you a link to the latest report and to the Bank of Canada website as well. Yeah. Beige book is an important one as well. That is usually released as well. This is a beige book. This gives us each Fed state will give us a view of how they see the markets, and it's a good read. It's a good read, but it's more of a weekend read. So it's something that you don't need to be aware on the very, very short term. It's something that it will build your macro knowledge, especially around the US Feds. Speeches as well. There are some speeches, as I mentioned. We've got ECB speakers, which includes Lagarde. We've got Fed speakers as well, Williams and Bullard as well. Yeah. Going to Thursday, as I mentioned, we have UK holiday. Okay, so we've got UK holiday both on Thursday and Friday. So the UK markets will be offline, right? And we do have the starting of the OPEC meeting. Okay, OPEC meeting to be taking place as well. But apart from that, mostly sort of you've got crude oil inventories, natural gas storage. Yeah, not much else really. We do have the ADP non-farm employment change figure. But again, I mean, all eyes will be on Friday. Okay, all eyes will be on Friday, where we do have quite a lot of data points. Most importantly, the US non-farm payrolls. Okay, non-farm payrolls to be expected there. We also have the US unemployment rate. We've got PMI services and manufacturing from the US as well. So quite a busy data-driven day from a US standpoint anyway. And just be mindful of any further speeches to take place as well, right? Okay, in regards to where central banks are in regards to interest rates, this sort of takes from the highest through to the lowest. Kiwi at 2%, CAD at 1%, UK at 1%, US is around 1% as well. Aussie at 0.35%, the euro is flat. Japan's is keeping a sort of loose monetary agenda at minus 0.1, and so is the Swiss at minus 0.75. So the focus is going to be on carry trades as well, right? So especially going into the month end and the new month to begin, just be mindful of a lot of volatility in the FX space as well. Yeah. Okay, well, thank you for joining in this session, guys. Hopefully it's been informative. If you have any questions, feel free to put it, send it through to us at info@alphachain.co.uk. And for our members, yeah, if you have any questions, please put it into a direct message. Send me a direct message in our community channel. Yeah, I'll be happy to address any questions you have there. Thank you for joining in, and have a great trading week. Take care. Bye-bye.